Hey everybody, thank you for joining me for today's end of day review. I hope everyone is doing well and had a good day. And in this video, we are going to go through the Emini 5-minute chart for Wednesday, November 12th, 2025. Here's the past 20 to 30 bars of the prior day. Fairly tight trading range, maybe you call it an expanding triangle where the range is expanding. It's a type of trading range where the range gets more broad. So we're getting higher highs and lower lows. The market's in breakout mode. Every time it breaks out to a new low, it reverses up. And when it breaks out to a new high, it reverses down. So on the open of the day, the gap up, you can see it as a bull breakout, attempting to break out above this trading range. But the gap up was rejected, meaning we gapped up, but bar one was a big bear bar, which is hinting that traders are not accepting the gap up. Instead of the gap up leading to more buying, it immediately reversed down. And that creates resistance on the open. So we gapped up to the open. Maybe you have momentum detecting algorithms, trading programs that using the RTH chart, you see 4 or 5 consecutive bull bars, then the gap up. Some trader or some algorithm automatically buys right on the open of the day. And if they bought, they're disappointed by the reaction of bar one. And that creates resistance at the open of the day. So gap up, pullback. Bulls still got the second leg, but when we tested the open of the day, where the market gapped up to, we found we're selling. 3 and 4, strong reversal down, especially strong bar 4. Not so much overlap with the prior bars, closing near its low, far below the prior bar's lows and even the EMA, and this is trapping traders above. Again, the gap up, this is all a micro channel from 78 to bar 2. Traders will buy below the first, they'll buy the first pullback below a strong bull bar 2. What happens if you buy below bar 2? During 3, you get trapped on 3 and 4. You're disappointed if you bought here. So 4, again, it's a bear breakout, trapping traders above. And you can see the reaction on bar 7. And also look at the structure from bars 5 to bar 8. Bear breakout and follow through. And then reversal attempt, bull reversal, pullback, second push up, pullback, and attempt at a third leg up. So now we have 3 pushes up to the 50% pullback of the bear breakout. So a couple of reasons to expect resistance in this area. Late legs usually reverse because of the channel line in exhausted traders. 50% pullback, a common place for sellers after a bear breakout. And we got the reaction on bar 9. 9 also trapping traders, but not breaking out far below the bars to the left, so more likely to pull back. We have buyers below bar 6 after this rally, but the reaction, if you bought below bar 6 on 9 or 10, are you excited about your follow through, or are you disappointed as a bull? You're probably fairly disappointed. If you're a stop order bull waiting for a strong stop order entry, you never got one. Where is the stop order signal bar? Doji, bear bar, and 12 never triggered. So the bears get a spike and tight channel down to bar 21. And there's a tight bear trend line. And bulls finally broke it on the rally to bar 26. The trend line break, not as strong as it could be, but the bulls were able to cross above the trend line and get consecutive bars closing above it. But the bulls were unable to get a bar completely above the moving average. They were unable to get a bar even closing above the moving average, even though it looks like bar 26 may have closed above. I believe it closed below the EMA, and then bars 27 and 28 pulled the moving average lower, making it look like 26 may have closed just above the EMA. But either way, it closed just at or above the moving average, would have been better for the bulls if they created more distance from that area of resistance and closed on the highs, but enough of a trendline break to disappoint the traders who sold down here, sold the low of 21, the close of 21, anywhere through here. Traders selling, disappointed by the extent of this pullback, suffering a deep drawdown, and this creates support at low. Also, this structure, tight bear channel, trendline break, retest of the lows. Bulls are hoping this is a lower low major trend reversal. Trends usually don't just reverse from bear trends into bull trends or bull trends into bear trends. Usually you need a trendline break, a test of the trend's extreme, and then maybe an opposite trend. But in this case, in most cases, major trend reversals lead to trading ranges. And in this case, the lower low major trend reversal, hard to get long through here. Big bear bars followed by bull bars with huge tails on their highs. But the bulls were able to get decent price and time control through here. Nothing very climactic. 5-bar micro channel, bar 32, a weak stop order sell, so a limit order buy below 32. And then a strong second leg up through here. And look back at 34, 35, 36. If you look closely, this is a contracting triangle on a lower time frame. So high, lower high, lower high. And here, low, higher low, and higher low. Contracting triangle, breakout mode, more clear on a lower time frame. Here it's a bull breakout, followed by a bull flag, the contracting triangle, and then continuation up. So this breakout traps traders. This was a trading range on a lower time frame, and the breakout 37.38 traps traders below. There's a test on 41, testing the breakout point, testing this area. So 41, the traders who sold here trapped on 38, given a chance to break even. That leads to a second, third, and fourth leg up. So now the bulls have a spike, deep pullback, and channel. Now the structure here, lots of overlap, relatively deep pullbacks for the bull channel. Here's a bull channel line, and where is it testing? It's testing the start of the bear channel. So back here, spike, pullback, channel. The pullback is the start of the channel phase, and channels usually evolve into trading ranges. So in this case, spike, pullback, tight channel evolved into a trading range, but the start of the channel became the top of the trading range. The traders who got trapped here, remember the bulls, there's some bull who bought above bar 8 and they got trapped into a losing position. If they scale in lower, the market comes back to their original entry, they're going to take it. And 51 tested that area. And it's a dueling lines pattern. It's a wedge, 3 or 4 legs up to a double top. Strong reversal bar 51, follow through 52, but straight into the moving average. Maybe not ideal to sell there, but traders sold a pullback and then got subsequent legs down to 58 and 61. Now we've got 3 legs down, 1, 2, 3. But don't forget about this contracting triangle. The apex of the triangle usually acts as support after there's a bull breakout. So I'll keep the apex of the triangle drawn in purple. Expected to be support, and then structurally, 3 legs down, 1, 2, 3 to support. So it's no wonder we found support here. But the 3 legs down here, especially these 2 legs, were very tight. And this is a breakout, the bear breakout on a higher time frame, which led to a minor reversal, 2-legged pullback, low too short, leading to another leg down to a new low. Now we have a bigger 3-legged pattern, different ways to draw it. Maybe it's 1, deep pullback, 2, complex pullback 3, and it's also nested. It's kind of a nested dueling lines pattern. 3 legs down here, maybe it's 3 legs here, and even in the last push, these bars with tails, that's a 3 or 4 legged wedge on a smaller time frame. Again, testing that area of support created by this triangle. So the bulls ended up getting a decent reversal here, bar 70. Structurally, it's good. The bears have several legs down to support. It's a trading range, and you want to buy low and sell high, and we reversed at support. Bulls got a reversal, so they'll buy and scale in lower. In this case, we just paused and got a strong second leg up, but now we're back to the highs. So remember back here, spike and channel, 3 or 4 legs up. Bar 51, this reversal traps traders here. Some unfortunate bull bought close 50, they got trapped, and when the market retests this area, this becomes resistance. So the bulls who bought, scale in lower, they exit at their original entries and with a profit on their lower entries because they're disappointed by what happened when they bought here, so they're not eager to buy here again. So 72, 73 might simply be a vacuum test of resistance. So big consecutive bull bars, but are we breaking out of all the bars to the left, or is it a vacuum test of the top of a trading range? And we stayed within the range, finding sellers in that area. All right, that's going to be it for today's end of day review. Thanks everybody for tuning in, and I hope everyone has a good night.